Hey everyone, and welcome back. I hope everyone had a lovely Christmas and New Year's, or at least a holiday break over the past couple of weeks or over the past week. And I hope you're excited for another year jam-packed full of investing videos. And I thought, what better way to start this glorious year of 2021, leave 2020 behind, than to have a look at some ridiculous investing videos that have been popping up on TikTok over the past couple of months. Recently on TikTok, there has been an explosion of these short 10, 20-second videos that are supposed to be providing some kind of investing or personal finance advice. And most of the people making these videos have absolutely no idea what they're talking about. So today's video, I thought we'd go through some of them, hopefully provide some entertainment, and I can also share my perspective as someone who has been studying investing and finance over the past few years and have personally done quite well investing in the stock market, providing some consistent but significant returns over that period. Also, I may have to mute some of these videos because some of them have copyrighted music, but I'll do my best to explain what the person is saying if they're saying anything in those videos. But with that said, let's jump into it.
If this is on your For You page, welcome to Stock TikTok. We don't mess around. We make money on this side of TikTok. We teach you how to trade stocks, read charts, and invest in companies like Amazon, Microsoft.
I'm sure you do.
Tesla, and Apple.
Okay, so this is literally just an ad. He's just explaining what's on the screen. But let's jump over to his TikTok page. Let's see what else he's got, because this seems like it's literally just an ad to go and look at his other videos.
Learn at our members to buy APVO at $8.59. Today, the stock went nuclear and ran to $82 after hours for a 1,000% gain. It gets better. 4 days ago, we alerted our members to buy Square calls for 74 cents a piece. The stock ripped all week heading into earnings, and today, we sold those same contracts for $20 a piece. That's more than a 2,600%.
Okay, so first of all, he's talking about trading stock options, which is basically making some kind of prediction about what a stock's price is going to do over the next week or over the next couple of weeks. Apparently, he's had some pretty big wins, but I absolutely guarantee you that his losses far outweigh his wins, because you just cannot reasonably and consistently predict what a business's stock price is going to do over the course of a week. That's not something that is reasonable to expect that you can do. In fact, the stock price movements of a business in the short term, over a week, over a month, even over a year, are entirely unpredictable. No one knows what's going to happen broadly in the economy, or something specific in that industry that may cause some disruption on the supply or demand side, or something with that business specifically. Anything could happen to that business over a 1 year period. Even the greatest businesses have significant fluctuations in their stock prices over time, because even though over the long term great businesses generate more profits and grow their stock prices over time, in the short term, what happens to its stock price is highly unpredictable. Also, I've just read some of the comments on this video, and there's quite a lot of unhappy people who seem to have signed up to this person's stock tip site or something, and basically it seems like he makes a lot of claims, and some of them are going to be successful and he can make a TikTok about it, and the others he'll just try and push away to the side and not talk about.
How old are you again? I'm still 18. Have you started investing yet? Well, the truth is, I want to start investing, but I don't know what stock to pick. Why don't you just pick all of them? Pick all the stocks. What do you mean? You can invest in an index fund, which is like a basket full of stocks. So instead of investing $100 into one company, you can invest $1 into 100 companies. Okay, so what are the benefits to index funds? Index funds are best for passive investors. That way you don't have to go crazy trying to guess which stock to pick. That sounds so much easier. I didn't even know index funds existed. Well, stay tuned, because in the next video, I'm gonna give you...
Okay, that's actually pretty good advice for introducing someone to the stock market who has never looked at investing before and doesn't know how the stock market functions. Going into something passive like an index fund where you get broad diversification is generally a good idea, although I think there certainly is merit in, over time, as you've been investing and as you invest over your lifetime, there is merit in understanding how the markets function and learning about businesses so that you can have more control over where your money is going. But actually, I don't really have anything wrong to say about this video. It's completely fine.
You're going to turn $100 into $1 million in 1 year just by doing this. What we're going to do is I'm going to teach you how to trade options in the stock market with proper risk management and trading large companies such as Apple, Microsoft, Facebook, Tesla, Amazon, and so on. No penny stocks, no small stocks. We're going to trade large companies, and we're going to aim for 20%.
Okay. I can't even let this guy finish. So there's a lot to unpack here. First of all, 20% per week. It doesn't matter what kind of options trading, penny stocks, whatever you're doing, there is no way that that is a reasonable return to expect consistently over time. You might be able to do it for 1 week. Certainly it's possible if you're gambling on speculative businesses or even stock options, then it's possible in the short term. But to be able to consistently do that every single week for 52 weeks and then to go on and do that for the rest of your life is not reasonable. The average market return over the past 120 years of data that we have for US and Australian markets is somewhere between 6 to 10% adjusted for inflation. The other misconception that this guy talks about in his video is he's saying that it's not as risky because you're not trading penny stocks or that you're not trading these high risk, really small companies, that you're going to be trading these big businesses. But that's actually not, well, that is one layer of whether an investment is going to be risky or not. But I think more significantly is the fact that you're trading stock options. You're trying to predict the stock price movements of a business, a real business that real things happen to in the real world. You're trying to predict what its stock price does over a week or two. And that in of itself is highly risky. So even if you're not investing or trading penny stocks, trading stock options is highly risky. It's only reasonable to predict where a business will go when you give the business enough time to work through short-term problems, right? When I invest in a business, I don't expect that business will be necessarily in better shape in a year's time. I obviously look for businesses that are not going to be in substantially worse shape, but I recognize that over the course of a year, even over the course of 6 months, a year, maybe even 2 years, something could happen to the business that doesn't damage it fundamentally. It's still going to grow over time, but causes its stock price to go down during that period. And that is something you need to recognize when you're investing, whether you're investing in an individual business or even an ETF, even when you're investing in the 300 biggest businesses in Australia or in the US. When you're investing in that way, there are still things that can happen, like the pandemic that we just saw, that can have an impact on the stock price or the ETF's price. And honestly, the price movements over the next 6 months or the next couple of months or the next year doesn't matter to you if you have a long-term perspective. If you're buying a business as if you're going to own it and hold it for the next 5 to 10 years or even beyond if it continues to be a great business, then it doesn't matter what happens in the short term. That short-term uncertainty of not knowing what the stock's price will do tomorrow does not matter.
The average cost of 4 years...
Hang on a second. Couldn't this guy at least look at the camera? I mean, it's only a 30-second video. I'm sure that you can just memorize the few lines that you have. You can even cut the video up if you want, but I don't know. That's just something I noticed. There's someone who obviously cares a lot about looking into the lens and actually engaging the audience with the videos that I create. But anyhow.
Years at a private college is $50,900, and a lot of people get a student loan for the whole thing. One of the main reasons people say you should go to college is because you can make more money afterwards. But the truth is, most people struggle with student loan repayment for the rest of their lives. The average...
That's not true, actually. Most people who go to college or university, as we call it here in Australia, most people who go to college end up earning far more than people who did not go to college. So it's actually not true that most people end up struggling with their student loans. There are certainly people who do, and certainly you would want to be very careful in choosing your education and weighing up the value of that education and the money and the salary that you can make from it afterwards compared to the loan. But it's certainly not true, I think, to just disregard university as this thing that is always a bad investment, regardless of what course or what university you go to.
The average interest rate of a student loan is 5.8%. Just the interest on a loan that big would be $246 a month. What if, instead of going to college, you just invested the same amount you would pay in interest on that loan into the stock market at an average return of 8%? Well, you'd retire with $1.5 million.
Okay, let's talk about this. First of all, of course, it is a very good practice to invest consistently from a young age if possible, even if it's investing in something broad like an index fund, right? And you get broad diversification, invest consistently into it. And as I said, over time, you can try and educate yourself more about individual businesses and taking more control over your finances and that sort of thing. But to say that why would you go to college, you should just invest instead, doesn't really make any sense, because college is about educating yourself so that you can make money to then invest, right? Just to suggest that college is basically just a cost, which is pretty much what this TikTok is saying, is completely untrue. College is not just a cost. There should be a cost and a benefit. For some people, that's a bad equation if you do a degree that doesn't lead to anything. But if you consider it deeply and you make the investment in your education and you get a good education that can then increase your income potential out the other side, then you will have a far easier time putting money aside and investing, and you will probably retire a lot quicker than if you just try and work a minimum wage job and just invest directly. Investing is a long game, and it's not just about, investing is kind of one part of the equation. You also need to focus on making a lot of money so that you can have excess cash to invest. So it's kind of a two-part equation. I don't think you should disregard university. Of course, for some people, the university route isn't going to be the way that you want to go. You might want to start a business, or you might want to go into a trade or some other route that doesn't require you to go to university. But I think this video is just an oversimplification of what is happening when it comes to investing consistently from a young age. All right, that's all the videos that we had for today. I know this video was a little bit different to what I typically do. If you enjoyed it, make sure you leave a like on the video and hit subscribe, of course, as I'll be doing some more of these at some point in the future. And let me know your thoughts down in the comment section below. If you hated this kind of video, let me know. I want to hear any kind of feedback that you guys have so that I can make videos that are valuable to you. And of course, I'll continue to be making the regular content that I do, deep dive into stock analysis and breaking down investing concepts so that you can better improve your personal situation when it comes to finance. But let me know what your thoughts were on this video. But other than that, hope you guys have a great day, and I'll see you in the next video.